Hi everyone, welcome in. My name is Graham from GuruFocus. Today we're going to take a look at some of the hottest EV stocks of 2021 that investors will want to keep an eye on moving into this next year. The first company we'll take a look at is Tesla, the originator of today's EV movement. Tesla first came onto the scene in 2008 with its Roadster. This model hit customers' hands, and it was based on a Lotus Elite chassis, which caused some headaches for the company down the road. However, the original Roadster did boast a range of over 200 miles and a 0 to 60 under 4 seconds, which is on par with sports car kind of standard in the industry today. Throughout the run of the Roadster, the car was surrounded by some controversy, including some pre-order scandals, recalls, and mixed media coverage. As one of the first publicly available EVs, many publications didn't know exactly what to make of it. They didn't know how to classify the car. Tesla again shook up the car world with its Model S, which reached customer hands in 2012 at its official launch. The latest iteration, the Model S Plaid, boasts a whopping 1,000 plus horsepower and is now the fastest production car in the world. Following the Model S, Tesla's more utilitarian models, the 3, the X, and the Y, have all found themselves appreciated by consumers around the globe. Global expansion efforts have also seen the Model 3 go toe-to-toe with domestic Chinese EVs, and the construction of a gigafactory over in Germany is set to boost sales in Europe. Taking a look at Tesla's stock summary page, long-term investors obviously would have made a killing if they were able to get in right at the company's IPO. Within 2 years, share prices bumped from $5 to around $60 per share. However, those share prices would remain relatively static around that $60 mark up until about 2019, when the company would begin its meteoric rise to break a $1 trillion market cap. While Tesla's recent growth may have made some ecstatic, some of its fundamentals could be points of concern for value investors. The most glaring issue that GuruFocus sees comes from our GF value line. Tesla is currently at a significantly overvalued rating. It is trading at 300% of our fair value of around $270 per share. The company maintains a financial strength rating of 6 out of 10, thanks in part to a cash-to-debt ratio of 1.59 that outranks 69.31% of industry competitors. However, the company's weighted average cost of capital exceeds the return on invested capital, indicating there might be some capital efficiency issues going on there. A profitability rank of 4 out of 10 is less desirable despite relatively strong operating and net margins. Investors should also note the severe warning sign issued for a declining gross margin. GuruFocus indicates that the company has seen an average decline of 3.9% each year from this metric. Moving into the future, Elon Musk, CEO of Tesla as we all know, has promised numerous improvements to the company's technology, including new batteries that were expected late last year. But he has yet to deliver on any of those promises, and customers are still kind of sitting and waiting around to see if those batteries actually show up. Customers also are able to look forward to the Cybertruck, or they may be dreading its release. Depends on where you stand for car design there. That's expected to come at some point in the next year or so, but there is no definitive date for that delivery. The company is also facing some major headwinds from several of the other companies on our list, one of which, Rivian, beat Tesla to the EV truck market, and Lucid, which is offering Motor Trend's Car of the Year, a coveted award that Tesla originally won with its Model S back in 2013. In December, Tesla looked like it was going to take a little bit of a hit with a recall of almost 500,000 vehicles. There was a front trunk latch issue and a backup camera issue as well. These made it so that the hood of the car could randomly fly up while driving, and the rear view camera on that car wasn't working whatsoever. Clearly, these are bad things going on for those that own the car. However, January saw the company soar once again after it delivered 308,600 vehicles during the quarter, which smashed its overall quarterly record. There were also rumors late last year of a deal with Hertz and potentially Uber in there as well, where the rental car company was going to establish a fleet of EV rentals for people to go ahead and try out around the country. This would have allowed potential customers to get their hands on the car for a little bit of a longer-term test drive there, if you can say that. But Musk rebuked any official plans on Twitter, saying that he hadn't signed any papers and didn't really know what was going on there. Now, the next company we're going to take a look at is Lucid. Lucid completed its initial public offering over the summer, and the stock officially began trading on July 26. The IPO was navigated through the ever-controversial SPAC merger with Churchill Capital, and Lucid raised about $4 billion through this deal. At the beginning of December, however, the company announced an SEC probe that was looking into any foul play that may have occurred during said merger. Lucid beat fellow EV newcomer Rivian to deliveries with its Dream Edition event on October 30th. Customers got their hands on vehicles for the first time, although the company is still working on making good on several driver assistance promises that are coming through updates down the road there. Where Lucid really shines is an EPA rating of 520 miles given to the Air model that blows competitor vehicles out of the water. Most of the other EVs out on the market seeing a range between 2 and at maximum 400 miles, so going above and beyond with 520 miles really does set them apart. And not to be outdone, the Dream Edition also sees 1,111 horsepower, offering direct competition to the Model S Plaid from Tesla. Now, looking at some of the numbers here, Lucid's financial strength rating of 3 of 10 leaves something to be desired, and a severe warning sign is issued for poor financial strength. However, a cash-to-debt ratio of 22.14 ranks better than 86.69% of competitors. Severely negative operating and net margins are definite negative signs for most value investors, and a PB ratio of 15.1 ranks pretty poorly. On September 30th, one of the gurus that we track, Philippe Lafont, established a new buy into the company, but we have yet to see any other gurus showing any interest here. Since its IPO, share prices spiked up and then settled to around $40 per share. This month has seen those share prices start to go on the up once again, but we haven't actually reached back to that peak that we did see. At the end of the year, Lucid did announce 2 financial officers who bring, quote, decades of strategic leadership experience in building accounting and financial functions at various multinational organizations, according to a press release. They do seem pretty excited about bringing these new guys on, and hopefully they will offer them some good financial advice and whatnot moving out into the future. The company also announced via a Twitter response that they are planning to move into European markets throughout this year, but they have yet to reveal any specific details regarding those movements. Now, moving on from Lucid, we're going to go ahead and take a look at Rivian. Rivian brought, as mentioned, the first EV truck to the market, and this R1T model utilizes a quad-motor drive, which allows each wheel to be powered independently. It also boasts a towing capacity of 11,000 pounds, which is nothing major in the grand scheme of the truck world, but it's pretty respectable for an EV. Alongside some unique storage compartments and an optional camp kitchen which pulls out from behind the seats, the R1T offers a Driver Plus system that handles hands-free acceleration and steering, which puts it on par with Tesla's autopilot system. The R1T has already proven itself capable of a, quote, adventure vehicle designation, having completed the Trans-America Trail crossing, during which it covered over 4,200 miles going coast to coast, almost entirely off-road. Pre-production models of the vehicle also served as support vehicles for the production of Apple's Long Way Up, a series where Ewan McGregor and Charlie Borman rode electric motorcycles from the southern tip of South America all the way up to LA. The truck recently landed Motor Trend's Truck of the Year, not to be confused with that Car of the Year award mentioned earlier, where it beat competitors from every major manufacturer. Alongside that, Rivian's ready and rearing with over 71,000 pre-orders for the R1T, so customers definitely want to get their hands on it. Now, transitioning to the company's financials, a cash-to-debt ratio of 1.62 ranks better than 69.65% of competitors, so they're actually doing relatively well there. However, no reported revenue and negative operating and net margins are major drawbacks for value investors. A PS ratio of over 8,000 ranks worse than 99% of the industry, and there is a severe warning sign issued for inventory buildup. Upon its IPO, Rivian saw 10 insider buys, but is yet to bring in any guru owners. A deal announced from Amazon for the order of 100,000 vehicles initially looked great for Rivian moving out into the future. However, the company has been punished in recent weeks because Amazon actually announced another deal with Stellantis. Amazon publicly stated that the Stellantis deal is a necessity as it will require multiple manufacturers to support its last-mile delivery efforts. Another unfortunate note for the company is that vehicle deliveries have been delayed. Customers aren't going to get their hands on them until 2023 as of right now, which left many of them longing for that adventure truck. Now, the final company on our list is going to be over in one of the most competitive EV markets. Shanghai headquartered NIO has quietly been plugging away in the background, making some headway over in China. The company posted over 10,000 deliveries in December alone and topped out over 90,000 deliveries throughout 2021. Where the company truly differentiates itself is its unique battery swap infrastructure, which allows the company to switch out batteries rather than recharging them. The company maintains thousands of different versions of these battery swap stations throughout China, and they all allow customers to pull in, have their battery swapped out in as little as 3 minutes, and then drive away with a fully charged battery. The company has also moved well beyond the traditional consumer vehicle sphere with its EP9 supercar. This recently set a Nürburgring lap record of 6 minutes and 45 seconds, which puts it on par with some of the fastest cars in the world. It also set an autonomous lap record at the Circuit of the Americas. NIO even tried its hand at racing with its Formula E race program, but it has started to wind down that front after selling off some of those assets. Now, compared to Tesla, NIO currently maintains a modestly overvalued rather than a significantly overvalued rating on our GF value line. It is trading around $30 per share as of filming, which is compared to a GF value estimate of around $26 a share. The chart also shows that share prices are expected to rise significantly over the next several years, showing good signs for that company. The company's financial strength of 5 out of 10 is decent, but a profitability rank of 1 out of 10 is a weak comparison to the likes of Tesla. Revenue has been on the rise throughout the last several years, and the company's negative net income has been heading towards profitability. A cash-to-debt ratio of 2.26 ranks better than 73.02% of competitors. Negative earnings per share have fluctuated throughout the year, but are closer to profitability than they ever have been. One severe warning sign is issued for a Benioff M score, indicating NIO may manipulate its financial results. The company's profitability has taken a beating from negative operating and net margins over the years, but they are better than the company has seen throughout its history. The company's return on invested capital is also trending towards better days. Now, moving into the future, NIO's upcoming ET5 sedan does feature their own in-house autonomous driving programming and looks to be a decent competition for the Model 3 over in China. The company is also working on an expansion into Norway, and deliveries are set to begin for its new ET7 sedan starting in March of this year, which does feature an improved drag coefficient. Now, to draw some conclusions from this information, Tesla clearly has already established itself as a powerhouse in the EV industry, but it is facing some major headwinds moving into the future from these new EVs reaching the market. Many of these relative newcomers have begun to carve out their own spot as key players moving into this electric future, but traditional auto giants haven't just laid down to let them steal their thunder. Toyota and Volkswagen announced a collective $170 billion in EV investment moving into the future years, with plans for fully electric sales by the end of the decade. Ford is also keen to get a slice of the pie, with its Mustang Mach-E leading the charge, and it actually landed second overall for EV sales in the US and surpassed GM. Honda also announced a joint venture in China, the largest car market in the world at this point in time, where it's going to build electric vehicles. The factory is set to open in 2024 with an annual estimated capacity of 120,000 vehicles. With the ongoing chip shortage, all of these manufacturers will need to find new ways to support production and overcome delays. If they aren't able to surpass the expectations of their customers, they run the risk of alienating them and shareholders alike.